I was trained to do this to you. Not by accident, not by some rogue manager, by the institution, by the handbook, by the scripts they gave us on day one. I worked at a major retail bank for 9 years. I started as a teller at 22. I left as a branch manager at 31. In those 9 years, I learned exactly how the bank sees you. Not as a customer, not as a person, but as a number, a tier, a behavior profile assigned the moment your account is opened. I left 2 years ago, and I've been thinking about this video ever since. What I'm going to show you in the next 13 minutes is not a conspiracy theory. It's a training manual. 8 levels of wealth, 8 completely different sets of instructions for how to handle you, what to offer you, what to hide from you. I know because I was handed those instructions, and today I'm handing them to you. By the end of this video, you'll know the 3 things bank employees are explicitly trained never to volunteer. Here's one sentence every bank employee is trained to say when you ask about a fee. I'll tell you exactly what it is, and the 4 words to say back in part 3. I'm John. This channel is where I document everything I'm learning about money from the outside of the system now, not the inside. I don't have a finance degree. What I have is 9 years of watching the institution operate from behind the counter. If that interests you, subscribe. New video every other day. Free, no fluff. Now let's get into the manual. I want to be honest about something before we start. I did this job for 9 years. That means I did some of the things I'm about to describe to real people in real branches on real days when they came in worried about money. I'm not telling you I was a bad person. I'm telling you I was a trained one. There's a difference. What I learned is that the bank doesn't have one relationship with its customers. It has 8. 8 distinct protocols, 8 different levels of transparency and flexibility, triggered automatically by one variable, the number next to your name. There are 3 things I was explicitly trained never to volunteer at any balance level. I'll name all 3 before this video ends. When your balance went negative, something happened on our screen that you never saw. A small flag appeared next to your name. Quiet, automatic. That flag changed the entire interaction before you said a single word. It told me, do not proactively offer fee waivers. Wait for the customer to ask. If they ask, follow the objection handling script. That script was designed to sound helpful without committing to anything. Here's what nobody tells you. Most frontline tellers have discretion to waive 1 overdraft fee per account per year. We were never trained to tell you that. We were trained to wait until you asked. The customers who didn't know to push, didn't push. The fee stayed. That was by design. At $200, your internal designation was something along the lines of standard low value. Low value didn't mean you were a bad person. It meant the bank's calculation put you in a tier that didn't justify significant staff time. Time allocated to a low-value interaction, 4 minutes. Time allocated to a high-value customer, unlimited. The credit card offer you received, the secured card, the one where you deposit your own money, had a specific name internally. We called it a retention product. It gave you a reason to stay and gave the bank a 24% interest rate on a credit line backed entirely by your own cash. Same bank, already your money, 24% to borrow it. Something happened on our screen when your balance crossed $2,000 consistently. The flag changed. Green meant this account is now marginally profitable, extend standard courtesies, do not rush the interaction. Amber meant keep it under 4 minutes. You never saw the flag, but the way the teller greeted you, the length of the conversation, whether someone offered you a coffee, all of it tracked back to that flag. The pre-approval you received in the mail wasn't random. The bank didn't decide you deserve credit. The system decided your tier made a credit offer statistically profitable. You felt seen. The algorithm executed a protocol. The protocol that genuinely shocked me kicks in at level 4. The instructions for that outbound call are something you need to hear. At $20,000, most customers interpreted something as personal attention. They received a call from a relationship manager. I made those calls. I had a list every Monday morning. Accounts that crossed a balance threshold. Accounts flagged as at risk of attrition. The call wasn't because we liked you. The call was because the system calculated that losing your account would cost the bank more than the cost of a 12-minute conversation. We had a script. Open with a personal touch. Establish the relationship. Identify the opportunity. Close with a follow-up. The call felt like someone cared. The call was a retention protocol with 4 acts. The part that genuinely bothered me, at $20,000, you qualified for loan rates the bank didn't advertise publicly. Rates 3 to 4 percentage points lower than the standard offer. We were not trained to mention these unprompted. We were trained to offer the standard rate. If you pushed back, we were authorized to go lower. Every customer who accepted the first offer paid more than they needed to every single time. That was the first thing I was explicitly trained never to volunteer. There are 2 more. At $80,000, the system sent an automatic alert to the branch manager every time a high-value account had any interaction, including a complaint. The same complaint that took 4 transfers and 2 hours at $200 was resolved in the first call at $80,000. Not because the bank liked you more, because the math of losing you was different. Or if you mentioned a better offer from another institution, we had a specific protocol. Validate the offer, ask for details, then do not offer your best rate immediately. Ask, is rate the only factor you're considering, or are there other things that matter to you in this relationship? This question bought time, and it surfaced emotional anchors, convenience, trust, history that could justify not switching even if our rate wasn't the best. You felt heard. We were buying time. At $500,000, your account was flagged for a handoff to wealth management, framed as a natural next step, a service you now qualified for. What you weren't told, wealth management fees are significantly higher. The average wealth management client generates 3 to 5 times the annual revenue. The handoff wasn't about better service. The handoff was about moving you to a higher revenue product shelf. The second thing, I was explicitly trained never to volunteer fee comparison. At $500,000, you had enough to negotiate fee structures, to ask for a custom arrangement, in some cases to qualify for fee waivers on products not advertised as waivable. We were trained to present the standard fee schedule as if it were fixed. The customers who asked, "Is this negotiable?" almost always got a better deal. The question was the key. We just weren't allowed to hand you the key. At $5 million, the rulebook that applies to every other customer becomes a starting point for negotiation rather than a fixed reality. Private banking has a separate rulebook, one that most employees at the retail level didn't know existed. Now, the sentence. Every bank employee is trained on a version of this line for when a customer asks about a fee. That fee is part of your account agreement, and I want to make sure you have all the information you need going forward. Past that sentence. It doesn't say the fee is correct. It doesn't say the fee can't be reversed. It positions the bank as informative rather than accountable. The correct response, the one that actually opens the door, is 4 words. Can this fee be waived? Not why did you charge me? 4 words. Direct. Answerable only with yes or no. In 9 years, I watched customers leave branches having paid fees that would have been waived if they'd said those 4 words every week. At $25 million, the bank's relationship with you inverts completely. You're not a customer the bank serves. You are a relationship the bank is organized around. 3 people inside the institution have performance metrics tied to your account. They don't tell you this. The third thing, I was explicitly trained never to volunteer at any level. The existence of the tier above yours. Every customer I ever spoke to believed they had full visibility into what the bank offered. Nobody thought there was a separate product set, a separate rate schedule, a separate level of access they simply hadn't been told about. I was trained that if a customer asked directly, we were to say, "We have a range of relationship options and I'd be happy to discuss what might work best for your situation." Which answered nothing, which was the point. The thing that would have changed everything for every person at every level was knowing that the tier above theirs existed, what it required, and how to get there. We were never allowed to say it plainly, so I'm saying it now. 9 years, 8 levels, 3 things they never told you. Here's what you do with all of it. Rule 1, always ask if the fee can be waived. Not why did you charge me? 4 words. Can this fee be waived? Most frontline employees have discretion. They are not trained to offer proactively. The question is the key. Ask it every time. Rule 2, always ask for the relationship rate. When applying for any interest-bearing product, say, what is the relationship rate for an account of this size? You may not always get a better number, but you will never get one if you don't ask. Rule 3. Know the tier above yours exists. Ask directly, what would my account need to look like to qualify for the next level of service? Make them describe it, make it concrete, then treat that number as a target. The bank was designed to keep you at your current tier. The movement is yours to make, but only if you know it's possible. I spent 9 years learning how the bank sees you. The last 2 years, I've been learning how to see through it. If this changed something for you, send it to one person who has ever paid a fee they didn't have to. One person, that's all. Next video, in 2 days, I'm going to show you the specific mechanism the bank uses to keep you in your current tier. It's not about saving more, it's about how the bank's algorithm reads what you do with what you have. 2 days, hit the bell, don't miss it. I'm John, subscribe for a new breakdown every week. The bank had 9 years to tell you this. I've got the rest of my career. See you in 2 days.